Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very much excited this morning to welcome you all to yet another insightful and also exciting edition of the Forex Morning Mastery with Sheriff Daramola. Today is the last trading day of the week. Happy Friday to you guys. And in fact, it has been an interesting week so far, though we had moments where we had choppy situations go on in the market due to the anticipation of the major events that we were looking forward to from the US economic docket, most especially. But during the second half of the week, we've begun to see some traction, giving us clues into where price action is likely going to be heading in the next couple of weeks. And in fact, in preparation for today's trading session, I have conducted a comprehensive analysis on all of the assets on our watch list with the hopes of identifying potential trading opportunities during the London and the New York session. For those who are with me on both my TradingView and Telegram platform, you definitely must have gotten this update, but we are going to be reviewing this and expatiate further to make it more comprehensible for us all to make our own independent trading decisions. So guys, welcome once again. Happy Friday to you guys. And for those who are joining us for the first time, you highly welcome on board. I'm very glad to have you around with us this morning. And you might be asking, what is it that we do here? Well, as technical traders, we come here together as a community in anticipation of both the London and the New York session, where we review our existing position if we have any, try to see how we can manage our positions, and of course strategically position ourselves ahead of both the London and the New York session. So this happens on a daily basis, 8:05 a.m. UTC. Technically, the live stream starts, and of course I encourage you to stay tuned in and of course be part of the subsequent edition of the Forex Morning Mastery with Sheriff Daramola. And in fact, the more time you spend with us, the better you get in understanding how this works and eventually be able to use the information you have gathered here to make your own independent trading decisions. And once again, you are highly welcome on board. With this being said here, we shall be diving right into the business. And as usual, you all know how we do it in this community. The first thing we want to be doing here is to check on the economic calendar. And of course, you know that these fundamental factors often manifest on the chart in technical patterns and of course price movements. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that will enable us to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. So on the economic calendar, we normally focus on high impact events from the economic dockets that affects the assets on our watch list. And so far this week, we have been looking at the US, the United Kingdom, and of course the Japanese economy. But mostly this week has been laced with a high level of high impact event from the United States, most especially. And the figures coming in from the US docket has been very promising, and in fact it's leading us on the path to another interest rate hike. And I think majority in the market are beginning to anticipate that event. And there's one event that happened yesterday, which was another positive indicator into the US economy. And we learned about the ARMS holdings. They did their IPO yesterday, and in fact, for those who don't know ARMS Holding is a chip design company owned by SoftBank, And in fact, the IPO yesterday was very, very successful as it jumped nearly 25%. And currently, their worth is about $61 billion. And I will advise you to get those shares if you don't mind. It's a promising company at the moment, so I would advise you to get them, and it's very cheap. The share is at 51, I think 51 or $52 presently. So it's something that you would like to get and include into your portfolio if you are someone who love long-term investment. And this itself, the event itself, portrayed the US economy had a very good spotlight here, and in fact we begin to see that traction in the last 24 hours, especially during the Asian session that's closed a couple of hours ago. And sincerely, things are looking positive for the US dollar at this point in time. So let's run through the what's it called, the economic calendar. Let's see what we are looking forward to. So yesterday we saw the producer price index, which came in just as expected at 2.2% expansion in that sector, which is not bad at all, though a little bit lower than the previous month. Then we had the retail sales data, which came in beyond expectations at 1.04. That's about, up 0.6%. That's about 1.04 positive deviation, as the market was expecting a 0.2%, but interestingly, we had a 0.6%, which was even way beyond the previous month at 0.5%. So everything is looking promising, and all parties leading to another interest rate hike the way things are going. Now, for today, Friday, September 15th, we have the Michigan Consumer Sentiment. Michigan Consumer Sentiment, it's an index released by the University of Michigan, and it is a survey of personal consumer confidence in the US economic activity. Now, this index here gives us a picture of whether or not consumers are willing to spend money. And generally speaking, a high reading, of course, is a positive sign for the US dollar. And looking at the data we have here, comparing with the previous month, which came in at 69.5, economists are projecting 69.1, which is not a little bit promising at all. But we are going to be looking forward to see what the actual data is going to be. Will it be as expected, below expectation, or even beyond expectations? And you know how we do it as technical traders here in this community. What we want to be doing is to position ourselves, sniff through the chart, position ourselves, look out for patterns, structures that will help us strategically be in the know of where price action is likely going to be heading to for today. So with the information we have gathered so far here, I would like to move right into the business for today and look at the chart from a technical standpoint. So to start with, before we start, please, I would like to know if the sound quality is good. I spent quite a lot of time trying to fix things up this morning, as I had a reset over the night, but I hope things are doing very well right now. Please let me know in the comment section if the sound and the visuals are quite good. If they are not, please let me know, of course, and I will do the necessary adjustment to make things make our experience better out here. So please, I look forward to your feedbacks. Please just say something in the comment section. It doesn't cost anything, and thank you in advance for doing so. I see your comment, Adeni Babalola. Good morning to you, and glad to have you around. I know I owe you something, but don't worry, I will get across to you as soon as possible. Thank you very much for your feedbacks. So with that being said, let's dive right into, Jay Kyle, good morning to you. Thank you very much for your feedback. I really do appreciate it. Thank you very much, guys. So the next asset we are going to be looking at this morning is going to be the GBPUSD, which did pretty well, at least in the last 24 hours, though we struggled throughout the course of the week. But finally, we saw some momentum yesterday, which actually gave us an insight into where price action is heading to. Now, let's look at this from an holistic standpoint, that is on this 1 hour time frame. Let's see how the week started for us all in this community and what led to the decisions we made throughout the course of the week. And let me emphasize this: the reason why I always like to go through how the week started for us is simply because it helps us to have an idea of where we are coming from, and of course give us a clue into where we are going. And secondly, it serves as a guide into understanding how to use price action to position ourselves ahead of any trading opportunity. Now let's look at this closely. At the beginning of the week, we had this scenario here. Where was that? Okay, we had a situation where price was, we had an impulsive move at the beginning of the week that led to the breakout of that descending trend line. And hold on a second, there is a call here that is disturbing. I would like to. Okay, so I'm sorry about that. So right here we had a descending momentum in this market before this week began, giving us a beautiful descending trend line that we were using as a yardstick to guide our trading decisions for this week. And one interesting thing that happened at the beginning of the week was this impulsive bullish leg, which led into the breakout of that descending trend line. And of course, from a technical standpoint, when we see a breakout of structure like this, we expect that that trend line may no longer have the capacity to continue to negate that bullish attempt, hereby leading to it folding up to that momentum. Then when we saw this, we anticipated buying opportunities at retest of structure, which we actually took advantage of. But it didn't last long. I think price moved about 40-45 pips before price dropped back into that structure. Now, from a technical standpoint, we talked about this in detail on Monday, that whenever price action breaks out of a structure, we expect that some point in time price will come back to do a retest of that structure in anticipation of the uptrend continuation. Now, in the with the idea of a retest of structure, we had positioned ourselves right at this trend line here, exactly around the 1.24620 area, where we saw buy pressure around that area that lasted about 7 to 8 hours, giving us signs that we might be seeing another wave of bullish momentum. And interestingly, we took advantage of that opportunity, and that one as well did not move significantly well, as we had it move about 35 pips before bearish momentum happened. So you can see throughout the first half of the week, it was more of a choppy scenario, and whenever price moves, it doesn't really move significantly well. And what this simply made us to understand is the fact that this market during that period was very indecisive, as majority in the market were not sure of where price action will be going, and especially during a week that is laced with a lot of high impact events. Everyone in the market wants to look forward to see what data will come in and then make a decision. Then yesterday during our live session, we talked about, I think on Wednesday, we talked about, okay, it was yesterday, of course, we talked about the breakout of the descending trend line, and this was where our center of focus was, as at yesterday morning, where I published this update on the GBPUSD. And whenever we have a range like this, for those who are with us in this channel, you know how we do it. We wait for either a breakout of the range or a breakdown of the range to give us an opportunity to trade. And of course, you saw what happened here. We saw price break down the support line. In fact, it came back to retest it, confirming that sellers are likely going to be pushing price to the downside. And throughout yesterday, we have been selling the GBPUSD. And remember that we had multiple levels here that we said we were going to be using to maximize the potential of this bearish move. So we had levels like the 1.24620 level, as you will see right here, and then we also added one more at the 1.2450 level, and see what happened here again. We added one more at the 1.24350 as we rode that move all the way to the downside, scooping over 150 pips thereabout before this bullish momentum began. And for those of us who took advantage of this opportunity, well done to you for being on standby to have capitalized on these moves. And of course, if you had moved your stop losses accordingly, you must have been taken out of all of the sell positions at this point in time. So once again, congratulations to everyone who has been part of this profitable journey. Now, with the new setup, with the new situation we have in the market right now, what is going to be our plans for today? Are we going to continue selling the GBPUSD, or are there chances that we will begin to see reversal setups coming up in the market in anticipation of price moving to the upside? Remember that today is the last trading day of the week, and we know how peculiar such days are, as participants in the market who are taking advantage of a potential trend will likely want to be doing some profit-taking activities, closing in some of their positions ahead of the weekend, and of course this would reflect on the chart as price action transitioning into the opposite direction of the prior leading price action. Now, is that going to be what will happen today, or price will run through to the downside? Well, looking at the structure here, while trying to sniff through the current market structure this morning, I was able to identify a couple of more levels here that we shall be using to guide our trading decisions today. Now, don't let us forget about that descending trend line we had here on Wednesday. We identified a new trend line after price action broke out of the first one, and the new trend line we had was this one right here, as we saw price had consistently respected that trend line so far this week. And right now, price action is gradually approaching that trend line, making it a very crucial juncture in this market where we need to exercise some patience, waiting to see how market participants will be reacting to the zone to determine what our next line of action will be. And of course, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we want to feel comfortable in our sell position, and of course look out for more opportunities to capitalize on the bearish move. Now, with the way things are going right now, it is quite clear that price action is right below the descending trend line, which of course triggers the idea of looking out for selling opportunities. Now, will that be what will happen today? Well, let's look at what the structure is saying. Now, since the later part of the New York session yesterday, we noticed that as soon as price got into the 1.23975, which happens to be the lowest point that price action has got into for this week, we begin to see some buy pressure resume around that area. So this gives me a sign that sellers are struggling around that point. As you will see, we had the first touch around this point, then price action came back but was unable to even get close to that level, hereby giving us a higher low. And you know how we do it here in this community. When we begin to notice higher lows in the market, it's a clue, it's a sign that buyers are gradually gaining momentum behind the scenes. Now, I took it a step further and I identified a pattern within that area which suggests that we might likely be seeing some profit-taking activities go on. And what did I see here? So after considering this impulsive move into the structure, we saw price come back into the 1.24150. We saw here that price was unable to break the previous low, giving us a new higher low. And what you will see here is price action gradually transitioned into what looks like a reversal pattern in the form of a double bottom structure. Now, you know how we do it. Whenever we identify a double bottom structure like this, the next thing we want to be doing is to identify a neckline that we shall be using to validate the double bottom structure. And interestingly, we have a structure just right around the 1.24150, which served perfectly well for a neckline for this reversal pattern. So of course, we want to see the breakout of that structure to welcome an opportunity to buy, of course. Now, we saw the breakout happen, and in fact, price action came back to do a retest of that level. So let's Let me do a visual representation of that. So we saw the breakout, price came back to do a retest. I actually missed out on this opportunity really, and let's see if this is going to continue to the upside. Now, like I said earlier, for those who took advantage of this opportunity, well done. There's nothing wrong buying here. Just ensure that your stop loss is just right below the previous structure, which is about 20 pips thereabout on that one, which is not bad at all for this kind of position here. Now, one thing we want to note here is that this reversal pattern, this reversal move, is a counter trend opportunity. And to take counter trend opportunities, you want to always be on standby to move your stop losses accordingly as soon as price action move significantly well in your favor. Now, at this point in time, if you had bought around the 1.24150, I personally didn't buy. I was still busy with technical issues. But if you had bought around that area, then you do want to be moving your stop losses, secure the current position right now, and let's see how the market is going to be reacting to this confluence right here around the 1.24350 level, and of course that descending trend line, to decide if we are going to be adding more buy positions to our existing trade. So for those who had missed out on this opportunity, we are going to be looking forward to a breakout of both the trend line and the 1.24350 area, retest of structure to confirm that we are going to be going bullish on this one. So this is the only condition that will make us start considering buying this asset for today. So a breakout of that trend line will be a beautiful sign that the trend line may no longer have the capacity to continue to reject that bullish momentum. So we want to be positioning ourselves anywhere above that structure to capitalize on an uptrend move. However, if the opposite happens here, the contrary happens, where we begin to see selling pressure resume below the structure with lower highs, then at this point in time we want to start considering selling. But right here, I'm still yet to find a structure that will determine where our entry point is. But if there are probably in the nearest future, I will definitely share them with you on both my TradingView and Telegram platform. However, we have something below the 1.24395 where we shall be having a sell stop order to capitalize on the downtrend continuation. But I still believe that if selling pressure resumes below the trend line, we are still going to be selling even before the breakdown of the 1.23975 happens. So stay tuned in. Be with me on my TradingView and Telegram platform, as I will be sharing an update if I begin to see a bearish setup come in right below that trend line. So it's a simple setup we have here, and our center of focus is basically this area. We want to be marking out that descending trend line, very, very important. We want to be marking out the 1.24350 level, and of course the 1.23975, all of which we shall be serving as a reference point to guide our independent trading decisions for today. So this is my view here on the GBPUSD. If you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the next financial assets on our watch list for today. All right. Okay, I see your comment, Richard Blackett. Good morning to you. Glad to have you around. I didn't see you yesterday. Trust you are doing very well, Richard. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So permit me to move right into the next financial asset on our watch list. So the next asset on our watch list is my favorite, that is the XAUUSD. And so far this week, we've been doing fairly well, let me say so, on this one. As at yesterday, we were running with about 120 pips thereabout from two positions as we continue that bearish momentum to the downside. But however, for those who have been with us in this community, we observed, sorry, that in the last between Tuesday, Wednesday, and Thursday morning, price action was trapped within a range, and can be connected to the anticipation of the events for this week. As we saw here, since Tuesday, price was trapped within a range, which further emphasized the level of indecision that took over the market at that point. And of course, one of the parameters we were using here to guide our trading decisions for this week was that beautifully identified descending trend line. And of course, this trend line has been of very much favor to us this week, as it has guided every decisions we made so far this week. And of course, you know what we said here. We said as long as price remains below that descending trend line, we shall continue to look out for selling opportunity. And the only condition that will make us be buying the XAUUSD this week is for price action to break out, retest that trend line before we can finally jump in to a buy position. And of course, this began to happen during the later part of the New York session yesterday, as we saw the breakout of the trend line and the 1909 level, retest of structure a couple of hours afterwards, and then since that moment, price action has been climbing and finding higher highs at this point in time. And for those who took advantage of this opportunity, well done to you for being on standby, as if you only have one position right now, you will be having about 85 pips in profit. And remember that we had multiple entries marked out on our chart yesterday to capitalize on that bullish move. We had levels like the $1,913.50 level, which of course we used to add more position to our existing trade. We had the 1915, we had the 1916, and of course we had the $1,919.50 level, are levels that we propose that we are going to be using to maximize the potential of this bullish move. And for those who took advantage of this opportunity, well done to you for being on standby to capitalize on that move. Well, prior to the breakout of the structure, it was quite an intense struggle between the buyers and the sellers yesterday, especially during the early hours of the New York session, as we had some selling position triggered right below the structure with stop losses right above the 1909, and unfortunately we were taken out of the remember we had a previous sell position that was running since Tuesday, which was finally taken out of, and the one for yesterday was closed in a loss, and led to the breakout of that trend line, which triggered that new opportunity to start buying this asset. So well done everyone for taking advantage of this opportunity, though the gold has not really given us the usual number of pips we normally see in the previous week, but this week it's okay. At least we're still doing fairly well so far. And right now, what is going to be our next line of action for today? What are our plans for today's trading session? Well, with the breakout of that descending trend line, I'm of the opinion that we might likely be seeing price action continue to the upside. Now, you might be asking that since all road is leading to the possible interest rate hike for this week, why is the dollar dropping at this point in time? It's supposed to be rising, right? Instead, it's supposed to be rising and continue to rise because majority will find it attractive to place their bet on the dollar so that they can get take part in that yield from that interest rate decision, potential interest rate decision. Well, I'm of the opinion that there is a tendency to crash the dollar to make it a little bit much more cheaper so that we can buy at a very cheap price prior to the interest rate decision. That is what I think is going on in this market. That is what I think is going on based on the psychology of this current market structure. But crushing it and later buying at a very cheap price seems most reasonable ahead of the interest rate decision, so that a higher return on investment is capitalized on. So with the way things are going right now, how do we intend to move on the XAUUSD? Well, the first thing first I would like to say here is that for those who had bought and taken advantage of this buy opportunity, you do want to be moving your stop losses right now. Let's secure this current buy positions while we look out for more opportunities. And the most appropriate area is anywhere below our weekly key level, which is situated at the 1,915, and of course the 1,911 area. Anywhere around here seems most appropriate to secure your current buy position. And always remember that we want to be given enough room for price action to breathe. So with a well secured position, what is going to be our next line of action? Well, personally, I would say we continue to look out for more buying opportunities here. Things are looking very bullish, and in fact the nature of the rejection of this 1,916 is looking promising in favor of the buyers. We have a bullish signal like the hammer candle, which technically tells us that buyers are still present in this market. So I'm looking forward to more buying opportunities at the breakout of the $1,919.50 level. Then we also have the $1,921.50 level. These are levels that have been peculiar with the current structure in the past. So we want to be seeing more breakouts of this level to add more positions to our existing trade. So this is how we are going to be maximizing this uptrend continuation here. Now, there is a caveat to the setup here. Remember that we are looking forward to the consumer sentiment index much more later in the day, which is a very high impact event, and the anticipation of this event alone has a tendency of influencing the market structure. Now, if it so happens that we begin to see selling pressure around this area, then we can be looking at a potential retest of the trend line that was broken yesterday. And what do I mean by that? Now look at this descending trend line here. Remember, this is the trend line that has been helping us to position ourselves for more selling opportunities during the course of the week, which was finally broken yesterday, as you will see here. Now, from a technical standpoint, when price action breaks out of a key structure such as the descending trend line, we expect that at some point in time there could be some profit-taking activity, which would reflect on the chart as a retracement phase, probably to retest the structure that was broken in anticipation of an uptrend continuation. And if we look at if this happens, we should be looking at a minimum of about 100 to 130 pips to catch here, if that is going to be the case. Now, we want to keep this in the back of our mind. We want to be as dynamic as possible. If anything like this begin to evolve on the chart, we begin to see lower lows and lower highs, or reversal patterns like double top structure, head and shoulder pattern, we want to be on standby to capitalize on that move. But the way things are looking right now, we really do not have any structure that will project that idea at this point. So we still remain very, very bullish on this chart. However, if anything new of such happens, like lower highs, reversal patterns, double top, head and shoulder pattern, whichever case it may be, we want to be capitalizing on that move, have a breakdown retest of that structure to join that counter trend opportunity. And of course, if it comes up on the chart, I will definitely share them with you on both my TradingView and Telegram platform. So at this point in time, we still remain very bullish. Let's hold on to our bullish bias, and if anything new comes up, you shall be updated in due time. And of course, if you are going to be part of the XAUUSD live monitoring window today, you will be part of the real-time price action. Now let me drop the link to the XAUUSD live window right away in the comment section, so that we can click on the notify me button, so that you can get notified as soon as we come online. And for those who don't know, the XAUUSD live window was born about 8 weeks, 7, 8 weeks ago, and it was born from the need from everyone in the house here. We actually clamored for it that we want to be seeing the real time trading on the XAUUSD, which you'll be really glad to be part of that session. So I look forward to seeing you right in that session on that one. So these are my views here on the XAUUSD. So we'll continue to hold on to a bullish bias here. Move your stop losses accordingly, and we are not going to be selling unless we begin to see structures that start screaming sell, sell, sell. All right, everyone, if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the next financial asset. And you can as well use that time to mark out these levels on your chart, as we shall be needing them as a reference point to guide our independent trading decisions. Then one more thing here is, I didn't draw this out. We have a trend line which has been supporting this bullish momentum right here. So let's mark that one out too on our chart. I would like to thicken it a little bit so that it could emphasize its importance at this juncture in the market. So this trend line here has been respected so far since Thursday, though we had a breakdown here, but price climbed above and has to remain above it. So let's see if it drops. We will look at if it's going to respect that trend line to incite another wave of bullish momentum, making it a more suitable opportunity for those who missed out on this buy position to capitalize on a strong uptrend. So let's see what happens. I will definitely give you updates in the comment sections of my TradingView and Telegram platform as always. Okay, I see your comment, Adini Babalola. Thank you very much. I think that's a compliment. Thank you and you're welcome. And I think there are no other questions here, so I will just assume that we are all on the same page here. So we shall be moving right into the next and the last financial asset on our watch list for today. But if you still have questions, you can drop them in the comment section. I will be checking them from time to time. So the next financial asset on our watch list for today is the USDJPY. And on the USDJPY, what a phenomenal 24 hours we have here as we begin to see a new bullish traction in this market. Remember how sensitive this zone has been for us in the last couple of months. As soon as price action gets into this area, we saw the reflection of the emotions of fear as majority in the market kept on closing in their buy position, which resulted in this retracement, choppy situations and consolidation phases around this area. And not until yesterday we begin to see this traction evolve in this market. Now let's run through how the week started for us here on this asset. Now remember, at the beginning of the week we saw this huge vertical impulsive bearish leg that went all the way into the 146.00 area. That was a very massive move, and it's not an ordinary move at all. It was influenced by the hawkish comment from the Bank of Japan's governor Ueda, who was saying that the bank is considering abandoning their monetary policy on their interest rate. Remember, the Bank of Japan's interest rate is minus 0.1%, which makes the profit margin with the US dollar very wide. Now look at it. The Bank of Japan interest rate is minus 0.1, and the United States dollar is at 5.2, or is it 5.0, 5.2 at this point in time. That's a whooping 5.19 margin, and it makes a lot of sense to invest your funds in the dollar using your yen to buy that currency, hereby having a higher return on investment on that one. Now, after that, if that comment by the Bank of Japan, we saw that crash in favor of the Japanese yen. A lot of people started dropping the dollar, buying the yen instead in that regard, in anticipation of when that decision is going to be made. But during the course of the week, I think Tuesday or Wednesday, we had comments from one of the political figure in the Japanese economy, which also has an influence on the economy, stating that it prefers the current monetary policy. And because of this comment itself, people begin to dump the idea that the yen is about to start increasing, because when he said that, people were like, okay, fine, if that is going to be the case, then it pays a lot more to continue to invest in the US dollar. And as a result of this, we begin to see that traction yesterday as price continued to climb to the upside. And of course, in this community yesterday, from a technical standpoint, we also anticipated that. And one of the things I told us all yesterday is that I will not continue selling again on this asset unless price breaks down the 147.00 area and continues to drop to the downside. I hope you all remember that. And we also had a trend line here that was supposed to be guiding that idea. So let me highlight it here. So we saw this trend line here yesterday, and we said if price breaks down the 147, we will continue to sell. But we saw what happened here yesterday. We saw price break out of the structure. We had a breakout of the trend line right here during the early hours of yesterday. Price came back to retest it during the New York session. We saw buy pressure, and since that moment, price action had continued to find higher highs and higher lows in this market. And for those who are part of this profitable journey, well done to you for being on standby to capitalize on this move. Now, the next thing we want to be doing right now, as usual, you know what we do when price action moves significantly well in our favor. We do want to be moving our stop losses. Let's secure these current buy positions while we wait out for more opportunities to maximize this uptrend continuation here. And from the look of this current structure, the most appropriate area for us to move our stop losses is around that 147.650 and the 147.550 area. That's a structure that was broken earlier today. So we want our stop loss to be way around or below that structure. Let's give enough room for price action to breathe, as we might likely be seeing some retracement back into structure to incite an uptrend continuation. So as a result of this, let's ensure that we have enough room for price action to breathe here. So with a well secured position at this juncture, what is going to be our next line of action for today? Now, before I go into that detail, I would like us to acknowledge the structure right here around the 147 point. Let's see how many. I think 147.600. That's a strong psychological area. So we do want to be marking that area out, 147.600. Let's mark that level out, and let's put into consideration the potentials that we could have some selling pressure resume around this area to incite a retracement into the structure, where the appearance or emergence of buy pressure would incite the uptrend continuation. So let's mark this 147 out, just in case we have some retracement go on in this market today before the uptrend move happens. However, if price does not drop into that structure and instead it continues to find higher highs, then a breakout retest of the 147.800 will welcome more buying opportunities. Now, there are two ways to which we can capitalize on the breakout of the 147.800, and for those who've been following me for a while now, you're very much familiar with this. Now, if you had been part of this profitable journey, that is, you bought at the 147.250, in fact, you should be having about 1, 2, 3 positions running at this point in time. So if you are taking advantage of these opportunities with us, then you can afford to leverage on the profit that you have made so far this week to test waters around the 147.800. So with a buy stop order sitting above that area, we can risk some of the profits we have made so far this week and see if this bullish momentum is going to click. And if it doesn't click, we know that we're still on the positive side of our portfolio. However, if you are new with us and this is your first time taking a trade on the USDJPY with us, then you are coming in on a clean slate. So I will advise you to wait for confirmations before jumping into that position. So what you are going to be doing is to wait for price to break out of structure. We have a retest confirming that truly buyers are going to be dictating the pace. Then we look out for buying opportunity and of course join that move to the upside. Then we can afford to place another buy stop order above the 148.00 area to maximize this bullish momentum. So this is how we are going to be managing our positions on the USDJPY for today. So I hope I made myself clear and I was comprehensive enough. And if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we draw the curtain for today. All right. So in the absence of no questions, I want to assume that we are all on the same page here. And it has been a wonderful week. It has been a wonderful moment with you guys today. We were able to attend to 3 major financial assets since the beginning of the week. And in fact, we did pretty well on all of them. Though the week started very, very slow, but we begin to see some traction during the later part of the week. That is why it pays off to be a little bit more patient during this kind of indecisive phase that normally comes occasionally in the market. So well done everyone. It has been a wonderful moment. I really do appreciate every single one of you. So let's see what happens today, how the market reacts to the structure. I think in the next couple of hours, probably 30 minutes into the consumer sentiment index, we should begin to see some sense of direction of price action. And of course, I will be giving you updates on both my trading view and Telegram platform. And for those who are joining us for the first time, I do hope that you are able to gain 1 or 2 things from what we discussed here today. And in fact, I encourage you to stay tuned in and be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how this works and eventually be able to use the information you have gathered here to make your own independent trading decision. And once again, you are highly welcome on board. And don't forget to support the project. Give it a thumbs up if you have found this content helpful and useful in making your independent trading decision. The only and the cheapest way you can support this channel is by clicking the like button. Your likes are very, very valuable to me, and in fact, it also helps the YouTube algorithm to push the video to a wider audience of traders who may find this content beneficial to them. Thank you in advance for doing so, and I look forward to seeing you right in the comment section of both my trading view, Telegram platform, and of course during the XAUUSD live window coming up much more later today, about 5 to 10 minutes into the beginning of the New York session. So see you all guys then, and do have a wonderful weekend, beautiful weekend to you all. Bye bye.